All right, welcome in everybody. As we got people joining in on all the platforms. Unfortunately, we're not live on TikTok, not yet. Maybe we'll see if it's still around, but we're live on every platform. So welcome in everybody to another episode 34 of Morning Market News. We're kind of going over the same thing we did yesterday about investing and going over the market, stocks, crypto. We'll go over all the details. Cody's going to be with us in a minute. I saw him pop out for a second. But hey, before we get into it, let's go over some of the details here. We got Bitcoin still hovering in the 71,000 range, almost 72, still only down about 0.5% on the day. We got Ethereum down to 38, high 3800s, down about 1.5%. Oh, excuse me. We got Solana at 169, up about 9% on the day. XRP at 68 cents, up about a buck, dollar, or I'm sorry, a percent and a quarter. We have Polkadot up to $11, climbing up to 11.50, up 6.5%. We have Chainlink up about 3%, and we have Hedera down about 2.5%, and of course we have good old Quant. As soon as I get down there, down about 2.5%, and it seems to be dropping in its status in the top 100. It used to be around the 50s, now it's in the 70s, but still think it's a good buy for Quant. We got the total market cap at 2.72 trillion. We're climbing up to 3 trillion. We also got the total volume today in trading about 136 billion, down 15%. Bitcoin dominance at 52.1%, Ethereum at 17.2%, and we have the greed and fear index at 91. So definitely not that much. It seems like people are still buying, even though the price is dropping a little bit. People are still buying. I know myself, I kind of dollar cost average some a little bit of Bitcoin the other day, and that's probably all I'm going to do. Maybe buy some Chainlink and some Quant later today after we get off on the stream. We also got in the market news in the stocks. Let's share this tab. We have the Dow back in the high 38,000, down about 0.1%. We have the S&P down about a quarter. We have the NASDAQ pretty much flat, up 0.05%, kind of stagnant there. So a lot of crazy things. We also have NVIDIA stating that they lost $80 billion in a venture. So we'll kind of cover that a little bit. And of course, we're going to cover a little bit of quant. I know Cody's coming back in here. For those of you who are new, if you can hit the like and subscribe button, give us a follow on Twitter, Twitch, Facebook, give us a subscribe on YouTube, really helps. Trying to grow this channel. As you guys know, my name is Sal. Cody is the other guy, other half of this channel. And I got into crypto through Cody, but I also do stocks, real estate. I own several businesses. As you can see, I'm in my office for my business. And of course, we are, I also invest in properties and real estate and things like that. And we're hoping to just share our points of view and everything. Let me just see if Cody's coming back in. So I know that Cody's bought some DOT. He's probably buying some more DOT right now, trying to hit that 1,000 target. But looking at Polkadot, I do have it in my portfolio. Let me just see what I have. I have DOT at 10% of my portfolio, which it's now. So, we're looking at a nice, healthy increase there. Actually, with the new price, it's up to 11%. Nice climb there. But a lot of great things coming out. If you guys don't know, Polkadot has its own channel on YouTube that you can follow, and they do updates on there. Kind of same thing as Chainlink. Think okay, Cody will be coming back in shortly. Polkadot's still a good buy. As you can see, guys, in the last year, the whole year has really been a good time to just buy it. And then we've been hitting some new highs. So if you've been buying from like April of last year, throughout 2023. And even still, while you're going through these spikes, you would have made quite a bit. But if we look at it on the all chart, still very down compared to where it was in the last bull run, which Cody and I think that it can exceed where it's going. Some of the news about it here, I don't think there's much other than going on. I do know like Polkadot announces Unity compatible SDK for Web3 gaming development. I do know that more developers are coming, new developers are coming. We got more hype around Web3. We got more hype just in general about the market coming, but there's not a lot of news, not a lot of things really happening in the market for it. Well, let's go back over to Bitcoin here. I want to show this for you guys as we pull up the thing here. So as you guys see here, we had this was right around FTX. We had Bitcoin down to 16,000. If you have been dollar cost averaging in through the whole time in 2022, you would have made a significant profit. That's from I keep trying to tell you guys, and you can go back and look on all our streams or all on YouTube. We're not taking any of them down, and you can see it's easier to just be in the market rather than time the market, because if you tried to time this, you'd be on a loss. Now, what does this mean for Bitcoin in the future, coming down in the few next few days, next few weeks? Is probably we're gonna probably get close to 80,000 as it keeps ramping up. What's up, Cody? Glad to have you in here. Welcome back
What
in.
is up, man? Yeah, it's crazy because like I'm mostly in alts, so it's like if you would have only bought Bitcoin for this past 2 years, you'd be up 4x right now.
Exactly.
But alts are gonna have their time.
Yeah, even right now, you could tell that they're having their time because Quant's kind of dropping on the list. So you're seeing others. I mean, we got Atom with a nice pump there up to almost $14. We have Polygon back over $1. Chain,
Polkadot over 11.
yep, Polkadot over
Speaking of
11.
Polkadot, man, I've been seeing people argue for so long about which one's better, Atom or Polkadot. Polkadot's up 100% for the year, and Atom's up like 10% for the year. So Dot has
Hmm.
been really outperforming Atom. And I've been saying that that's what's going to happen. I've been telling people that Dot is going to outperform Atom, and a lot of people in these Telegram groups would call me crazy and shit. But I mean, it's outperforming.
Yes, Dot is outperforming Atom. I think there's more projects on Dot than there is Atom. I dropped Dot, I think, or not Dot. I dropped Atom around June of last year. So I just completely wiped it out
That's
of my
when I did it as well.
and I switched it over to Dot. And that was probably a good decision because at the time I got out at about $10. And so for every one atom I sold, I got 2 Dot at the time. And now my Dot holdings is more than what my Dot holdings was back then and my atom holdings. So but keep in mind, guys, Cody and I have been staking the whole time we've been in Dot.
Yep, I've been staking Dot the whole time. I think in this past year, I've gotten like 115 Dot from staking.
Yep. And you can earn a lot, and it helps kind of alleviate that price difference that you might have during the bear markets.
Because there is inflation. Yeah, there is inflation on Polkadot. The inflation right now is like 7% on Polkadot. But if you stake it, you're not really affected by the inflation.
Yes, exactly. And in the long run, if you've been staking for the last 2 years, you're going to come out on top when the prices start to run up with the bull run. But speaking of the bull run here, I do see a lot of people, especially on Twitter, saying that the bull run is going to happen earlier than people think. And I still don't think the bull run is going to happen earlier. However, I do think that we're going to have a nice summer of good prices, good steady growth in all markets, stocks, crypto, the economy, because it is an election year and everybody's going to do everything they can to keep people happy, because there's nothing worse than having angry people go to the polls because they ain't going to vote for either incumbent. What they're going to do is they're going to kick everyone out and put in new people. That's usually what happens. That's what happened in the crash of 29. And the crash of 29 was the only crash that happened during an election year. Like right when that economy crashed, Hoover didn't get reelected. So ever since then, it's like any economic downfall has been pushed till after, or it happened like during a two-term president's last term. So they weren't getting reelect. They weren't going to reelect or anything. But even still, the 2008 crisis like happened really started in 2007 at the fall of 2007 and just kind of lingered on until about March of 2008 when we really hit the bottom. However, I know there's a lot of people thinking like we're going to hit another great recession and all this stuff, or we're headed to a depression. We're not. Banks aren't making the same type of loans they were 15 years ago. There's more due diligence, there's more regulation behind it. There's a lot more controls as to what they're offering the general public. Now, commercial real estate is going to take a huge hit because a lot of commercial real estate were done on no collateralization loans, APY loans, introductory rate loans. So they're going to eventually bite the dust. Eventually, the developer is not going to be able to afford to pay the loan, and those things are going to go into default. So big projects like hotels and things, expect to see those go into foreclosure. But apartment communities, expect to see those go into short sale too, and that'd be a good time if you are looking to get into real estate. Now's a good time for anyone that bought rental properties on commercial loans. They're probably going to go up for a good price. I know there's a couple properties even in Northwest Arkansas that are kind of teetering on that short sale, and I might be able to get it for 25 cents on the dollar.
It's crazy, but this is kind of off topic on the real estate part. But I just looked on my ledger and I clicked on the year performance. On my ledger, it says I'm up 18,000 for 19,000 for the year. So I'm up $19,000 for the year.
There you go. And that goes to my early comment, guys. Better to be in the market than a time to market, because all Cody does is every 2 weeks he gets paid, your dollar cost average is in.
And I don't make much. I mean, the only reason why I'm able to invest like this is because, I live with my parents and stuff. But, with that being said, I've been very patient. Like, even during the FTX crash, when Bitcoin was at 16K, people were saying don't buy altcoins. It's not going to go back to all time high. It's not going back to 2021. I ignored all of that and I continued to buy. And I mean, it's paid off. It goes to show you that, you know, time in the market's better than. I know somebody who's had their cash on the sidelines and was
Mm-hmm.
kept waiting for a lower point to buy, waiting. If that person was DCAing, then that person would already have positions in crypto and would be in profit instead of keeping your cash on the sidelines waiting to buy that mega. Because I feel like some people view crypto as you got to wait for the mega dump and you got to sell it at the mega pump. Like you're not always gonna time it like that. You're not always, and your goal should never be to sell your crypto at the top. Your goal is just to make profit and get out. You should never try to time the top or just aim for a top in general. You should not aim for all time highs. You should aim for get your money and get out.
Yes, exactly. Know when you want to get out, know when you want to start investing, know when you want to be in, but also know your risk factor. If you're starting to get the itch to sell, your intuition is telling you, "Hey, I want to get out," then get out. Then sell because it's worse to ignore your intuition, and if you lose money, which is most likely going to happen. Every time I ever got the intuition to sell, it might have went up. There's been a few times where it went higher. Uh, it happens. Like Tesla, I sold my intuition. I sold Tesla like right at the beginning of its real run up. And I said, you know what? I'm out. I made my money. Now I've been in Tesla since it IPO'd in like 2012.
Because you knew it was overvalued at the time.
Yeah, I felt it was overvalued. Now I missed out. If I had waited maybe like 6 months, I would have made like 3 times the money I did. But to me, I was comfortable saying, hey, look, I'm going to walk away. I feel comfortable right now selling. I'm out and I'm going to cash out this position.
It's better to the better scenario is taking money off the table because you're gonna have those feelings to where, man, like if I sell, if it goes higher, and you might sell and it might go 2 or 3 times higher after you're sold, it might. But I think you got to ask yourself, what would I be kicking myself more at? Would I be kicking myself in the face more at the fact that I didn't take profits, or would I be kicking myself more at the fact that I did, but it was too early? You're going to be kicking yourself more at the I didn't take profits scenario.
Exactly. Exactly. And I'd rather just take profits because like if you get life-changing money from your investments and you're in a volatile investment like crypto, take your profits and start changing your life. Don't try to make more money. Don't get greedy. When you start getting greedy, that's when you start losing. If, for instance, if you know that $500,000 is going to change the trajectory of your life, and your crypto portfolio goes to 500,000, it's time to cash out, pay your taxes, reinvest the money in, I would say, rental properties. Go to the sidelines on some index funds, and just dollar cost average your new earnings into there. Now, I have a whole video that I'm making today about making sure that you have making sure that your revenue streams for your personal income come in from all areas, so that way you're least likely affected. And I like I told you guys before, and I tell you every what's in your portfolio, that I make a tremendous amount of money from my businesses, then my real estate, then my stocks, my dividend stocks, and then from crypto. And as soon as this bull run is, I'm going to cash out. Probably be like Cody. I'm only going to have Ethereum, Bitcoin, and probably Quant. And I know I may upset some of our great followers that I might be dropping XRP and not getting back into it. But as far as I'm seeing the investment value, once this bull runs it, I don't think I'm going to get more out of XRP, because I think crypto is going to start behaving like the stock market in the next couple of years after this bull run, and maybe a year after the bull run. We're not going to see these fantastic gains.
That's what I was saying. And speaking of quant, it's like I'm confident that quant can go to 1,000, right? But even if quant goes to 800, and I'm having that itch, I'm like, it's at 800. It's not at 1,000 yet. It could go to 1,000, but I could change my life with this money. I might cash out at 800. Like I have 1,000 in my mind and it could go higher than 1,000. But the whole point of me saying that is just taking profits. Because I have a bunch of quant. I don't have a small bag of quant. I have almost 100 quant. So if you have almost 100 quant or more than that, like I do, $800, that's going to put you at about 75 to 80 grand. Like,
Yep.
do you want to leave 75 to 80 grand on the table? Or do you want to just grab that 75, 80 grand, go and buy yourself a little something nice, not going crazy with it, and changing your life? Like me, my plan is just to buy a car. The most expensive thing I'm gonna buy after this bull run is a vehicle because I currently don't have one, and I want to buy a vehicle I can keep for about 5 to 10 years. That's why I'm going with the Lexus, an older one, not a brand new one, but one that's like 6, 7 years old.
Yeah, exactly. And it's just have a I can't tell you guys as much. I'm not a financial advisor. I was a licensed stockbroker back in the day, but we all believe the same thing. When you make your money, take your money and readjust your strategy. Because when you start thinking that you can make more and more and more and more and more, it's time to get out. Because every time I've seen people try to make more and more and more and more, they always go bust. And don't think it can't happen to anyone. I worked on Wall Street enough to see regular people go broke, millionaires go broke. I've even seen billionaires go broke. Don't try to keep howling for the moon, and you're never going to reach it. Just get what you can, make a steady investment, readjust. It's okay to readjust your strategies, invest in different opportunities, and then come back to your original investment with the starter money. So like if you started with $100,000, let's just say hypothetically you start with $100,000 in crypto. You started in 2021, or and at the end of the bull run. Let's just say at the end of the bull run, right? and you were dollar cost averaging in, your initial investment was 100,000 plus another 50 from dollar cost averaging, and you made $1 million, the best thing you can do is take that money out, put it to the side, and then reinvest in other avenues to build your cash flow, like rental properties, index funds. I would definitely put money into Betterment, things like that. And that way you don't, and now you're diversified enough personally that even if the economy goes down, you're fine. You can weather it. You lose your job, you still have income. You can go find
Young
another
Thug,
job. You can be
Young
patient.
Thug even said in the song. I'm sorry, it's a little off topic, but you mentioned Betterment because he actually mentioned that in the song. Young Thug, he even mentioned. He said, "Talking about all that you spend, show me a Betterment." That's what he said, and I agree with that.
Exactly. And don't go buy money on frivolous things, because a lot of you young guys, I know there's probably quite a few younger guys. A big portion of our viewership is between 20 and 35. A lot of you guys don't know that Lamborghini, Rolls Royce, Bentley, Ferrari, they were all about to go bankrupt in the late 90s. They got bought up by other businesses, except for Ferrari. Ferrari pivoted and really did a good job at rebranding themselves. But all that aside, they were about to go bust because true wealthy people don't buy this stuff frequently. Like, even the guy that I used that he is unfortunately, well, not unfortunately, I mean, he lived to be 95 years old and fought in 2 wars. He passed away, but even he had a BMW, he had a Bentley, and he had a Rolls Royce Phantom. And when he passed away, all those cars were like, I think the Phantom was like 12 years old, the BMW was 20, and the Bentley was like 9 years old. So like when they buy stuff, they hold it. That's what true wealth. And he passed away with a net worth of just shy of $1 billion. He was like 900 million. He owned one of the largest answering services in the company. Nowadays, that technology is no longer needed. There's other ways to do it. But back in the day when you had beepers and you had to call them to reach your doctor, your lawyer, your accountant, or whomever. So that's where answering services were very needed. And they answered
Especially nine
calls
hundred
after
million.
hours. I'm
Nine
sorry, go
hundred
ahead.
million. 900 million's a lot of money today, but 900 million during that time, oh my goodness.
Yes, he could afford, and it also kind of rings true. It's like I probably will never hit that net worth because I don't have the same drive that he had. And a lot of people say, "What do you mean you're owning all these businesses? You're working hard. You're like nonstop." But the thing is that I came from a middle class family, so I didn't really see strife. He came from Irish immigrant, poor. His younger sisters they couldn't afford a crib, so they had dresser drawers that they used as cribs. Like and then after the war, he still had to make money for because I think his dad passed away. His mom, and this was like 1940s. His mom couldn't get work, you know, other than maybe like minimal, like minimal jobs like secretary or like, and there was no wartime going on. So nurse, so he went around after fighting 5 years in World War II, being in the Battle of Bulge, being in all this other hardship there. He went around and had to deliver every dead body from the war to the families. And he did that for like 3 years. Then went to North Korea, went to the Korean War, did the same thing. And then I think he said in this, if I remember correctly, in the 60s, he started catching his stride because he did like 3 or 4 businesses, they all failed. Then he finally did it in like after the oil crisis. He got his business in construction and it was steady. And then in the 80s, it allowed him to start the answering service. And from there, he just took off, you know. But every time I see someone that made tremendous success in a lifetime, which don't get me wrong, like 900 million in 1990s money is probably like close to 1.5 billion today in the value in with inflation. He he had a hardship throughout his life and just kept and he kept pushing for like a lot of that stuff that he went through. I will be honest, all of us probably wouldn't be able to do what he did. Could you imagine fighting in World War II and then to go to
That
the Korean War, and then you're going through the oil crisis, you're going through the 80s boom and bust, and you're still just keep pushing forward. Like that's
that's
the
the
mentality
definition
that
of
you
built
have.
different.
Yeah, he is literally built different. And keep in mind, guys, he went in a time he didn't run from the draft. He was a bigger than normal 14-year-old, so he lied about his age to go fight in World War II.
Damn.
Different times. He like that was the times everybody was picking up arms. Like, and even my grandmother said, yeah, it was a different times because men went to fight, women rolled up their sleeves and went to work to keep this country alive and keep the American dream alive. That was the determination that they all had. And they said they don't take step backwards. And that's why I noticed with a lot of wealthy people and a lot of investing, they don't take step backward. They try not to take step backwards. They may make a mistake. They may fail. They may declare bankruptcy, but they're going to move forward and they're going to learn from their decisions. If you guys have messed up, if you had made poor decisions with finances, made poor decisions in life, maybe married the wrong person and you got a divorce and you know things are kind of rough right now, just remember you have just take a step forward. Just keep taking a step forward because eventually, even I've been through a divorce. It sucks. I know it sucks. It sucks watching someone else in your house. It sucks having to pay those bills and you're living in a roach infested apartment with just a mattress on the floor. I know. I didn't get my hardship until my 30s when I got divorced. It sucked. It really sucked. I got divorced and that year I was turning 31. It sucked. It it
It's
sucked
exactly
tremendously.
why I can't get married right now. I don't want to get married anytime in my 20s. Not because I don't like the idea of marriage, not because I don't like the idea of commitment. I love the idea of having somebody in my life. I love the idea of commitment and I love the idea of being in love. But somebody getting up and leaving you like that, because especially with women, like I'm not on some red pill like shit, even though some of the red pill stuff is true, not all of it. But it's like, women, they can wake up one day and just decide, you know what, there's more to life than being a wife, there's more to life than being a mother. Why am I not living the life I want? I saw a YouTuber talk about that. Like literally everything was going great. He woke up one morning and his wife was like, there's got to be more to life than being a mother. Like there's got to be more to life than being a wife. You know, they can wake up and leave you like that. That's why I don't want to make a serious commitment like that in my 20s with somebody, because they could just wake up and leave my ass.
Yeah, well, the best way I could describe it, I don't mean to get off topic, but before I get on this is I want to say though, if you marry the right person, even if you're in your 20s, if it's the right person and you both are in the same direction, you both are committed to each other financially, you will make it. The most successful couples, married couples that make it are the ones that get together in their 20s, learn, grow, and develop together. They don't run from the hardship that happens. They don't say, no, that's it, I'm quitting. No, they say, this is what we're going to do to fix it, and we're going to learn from it, and we're never going to be in this position again. They keep moving forward. Same thing I keep talking about. But to Cody's experience, like to me, what I felt like is like I gave my ex-wife like a grenade and was trusting her not to pull the pin and stand next to me. That's basically what marriage was. Like he just kind of handed her something, said, okay, I'm going to trust you not to pull this pin. And you keep looking back to make sure she doesn't pull the pin. And then one day, pop. And then, it's like that was the end of it. Now, did I bounce back? I 99% of people would say I did. I've learned my lesson. I'm not living the high life anymore. I'm not in New York City. We were living in New York City at the time. I was making great money. But now I would say I'm making even more money. My opportunities are more, but I had to suffer for like a solid 8 years. And even with Cody knows, he was here when I was suffering with the business. We had no money. I was trying to get people paid. I was trying to pay all the bills. I was just working it. We were just working nonstop, 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 nonstop. And finally, it was beginning of 2023 when I really started catching my breath with businesses, and beginning of 2023 was when I started investing in other areas. And the same thing now. It's like it feels like, man, I can't believe that I went through all that hardship and now here I am. It's kind of the same thing with investing. It's going to look rough as you're investing, as your dollar cost averaging and prices are going down. But if you stay true, because like all markets, crypto's going to be here. It's going to be here. It's going to be here for a long time. It's going to start rebounding. You got to ignore people because most people make their decisions on emotion and they're going to pull out. And that's where when they start pulling out, you got to go in. When they start coming in, then you got to start pulling back and selling to them and then repeat the process. That's how you get wealthy. That's how most of the people, when I worked on Wall Street, people I met who made a lot of money, that's all they do. They're moving in the opposite direction of everyone else. But I also notice they're not spending frivolously. They're not going out to eat at expensive restaurants all the time. They're not going. Here's the best tip: people who work hard for their wealth don't frivolously spend it. The ones that get fast money, whether it's ill-gotten gains or legal, they spend it just as fast as they make it because they have one, sudden wealth syndrome where they feel like they don't deserve it. Two, their psyche is saying, I just got lucky. I really don't deserve it. Let me just enjoy it now before it's gone. That's usually one of the two mentalities that they have. Because if it's ill-gotten gains, they're spending it because they feel guilty that they stole it. That's why they spend it so lavishly and fast. But most wealthy people will never, never spend that much that fast continuously. They don't. They're long term. Some of them even are planning for like 50 years after their death as to where the money should go. Like they're going to live another 50 years and they're 90 years old. Like Warren Buffett, for example, has an idea of where everything's going probably 15, 20 years from now. And he's was he late 80s? He's probably not going to live maybe another 5 years, maybe 10. I mean, how much more does he have being able to be cognitive and participate in understanding this? So he sets out a plan, and if he passes away, there's still a plan for the
Was
next person to
Charlie
take over.
was Charlie Munger older than Buffett?
Yes, he was a little bit older, not like tremendously older, but I think he was like 5 years older.
It disconnected for some reason, but he was like how much older?
I think he was like a few years older, maybe like 3, 4, or 5 years older.
Okay, yeah. I was wondering. I was so like, that's unfortunate that they be the exact same age and one left the earth, quicker than the other. But that happens every day.
Yep, that happens. It happens, but you also got to have a plan. That kind of goes back to what I've been saying for you guys. Have a plan for what you're going to do with what you're investing. Have a short-term plan, mid-term plan, and a long-term plan. Don't sit here and tell me, well, I may not make it tomorrow. Well, you may only break a leg tomorrow, so you're going to have to get that taken care of. You're not guaranteed death every day. You're
That's what
mostly
my grandmother
guaranteed.
tells me. She tells me all the time. She's like, because she doesn't know. She's older. I get it, but she's like, Cody, I'd get out of that mess. You never know. You could go. You could die tomorrow. And literally, what I think to that is, well, I might only break a leg tomorrow. You still got to cover that. Like I get the whole life is not guaranteed narrative, but you got to kind of have a balance, like yin and yang. It's like, yeah, it's not guaranteed that we'll make it tomorrow, but also, what happens if we do? What do you're going to be in the same situation if you didn't take the risk.
Oh, absolutely. But let me put to you this, guy, especially young people. Let's just say Cody. God forbid something happens to Cody. He either gets into a coma or passes away, right? Well, what's that mean for his family? Well, it's about $5,000 for a funeral service and a casket, just average, or $8,000 to cremate and dispose. You might have medical bills, like again, the car accident, you got medical bills to take care of. there, and there's the transfer assets fee, taxes and all that stuff. So it's like you got to keep this in mind as you're trying to build this. That's why one, you definitely should have, especially if you got a family, a last will and testament, and always update it at least once a year, and have someone especially if you have a family, you should have a financial advisor, and they should be holding it so they can say, okay, I got his last will and testament. Here it is. Your spouse and your advisor will talk and they'll take care of you. I hate to talk about something so morbid, but you have to be able to prepare for it. Even I have a last will and testament, and I have documents saying what to do if I'm in a long-term coma. I have insurance to help cover the business. I have a trustee that if something does happen to me, they'll step in and take care of the businesses. I have a 5-year plan for my businesses. After that, it's up to them what they want to do with it, or if they just want to sell all the businesses and just be done with it. I hope I don't pass away tomorrow, but in the event that I do or I get incapacitated, I also have life insurance for me, that for the business, that covers any of those events. So that way, the people who work for me don't have to worry about, oh no, the owner died. What am I going to do? Or the owner's in a coma. Do I still have a job? No, they still have a job. They still have something to live off of. And there's still someone there to control the business. That's just how my mind thinks. And I think everyone should, kind of do the same thing. Think the same way with what you're trying to do.
Yeah, you
But
know, that goes hand in hand with health as wealth. I'm not the healthiest when it comes to my habits. I've picked up bad habits again, like nicotine. I'm trying to stop that again. It's been a cycle. Mainly, it's a crutch. There's really no excuse for bad habits. You either just admit it's a crutch or you just be in denial. But it's like me personally, well as I'm doing financially, I'm not where I want to be in life, and I'm not happy in life. So I'm battling that. And habits. Health is wealth, but at the same time, it's like I'm in this battle.
absolutely. And we all have our things. We all have our things that we got to overcome. We each got our battles. So don't think that you're weak for that. Everybody's got a vice. Everyone's got stuff they got to come over. Just like that mentor I was talking about. He'd say everyone's got shit to deal with. It's just that everyone's got different shit to deal with. That's all. We all
Yeah.
got problems. We all got stuff to do. We all have the same worries, cares. And at the end of the day, it's just like a lot of the older generation says, like we all got the same shit and we all bleed the same. Nobody nobody is different than anyone else. So don't think that if you're having a hard time quitting like a weed addiction, a drug addiction, alcoholism, cigarette addiction, maybe even a spending addiction or a food addiction, just remember it goes back to what I said, just small steps forward. That's it. Just take a step forward. Just take a step forward. Like if you're a bigger person, just like me, I don't find it hard to go to the gym because like I feel like it gets out my aggression. Because sometimes I want to knock some heads while running a business. I can't believe I got so people would make these type of decisions or clients talking out the side of their mouth, and you have to deal with it. So I like going to the gym, work out some of that aggression, but sometimes it might be hard. Maybe you're self conscious. Just go, slowly go. Eventually, you'll notice that most people don't even know that you're there. Most people aren't even paying attention to you. Most of us are invisible to everyone else, and everyone else is invisible to us. We only think people care about us because we're hyper fixated on our flaws, and we think everyone else can see them, but most people can't even tell. Most people won't even know. So just keep that in mind. Take a step forward. And it's kind of the same thing as you're investing, just ignore the people that are naysayers towards investing. Just say, hey, I know, hey, this is what I want to do. If it doesn't work out, then hey, I got a plan if it doesn't work out. But keep investing. keep investing, keep dollar cost averaging. But what I do say is don't moonshot into one investment, don't moonshot into just crypto. Find a way to diversify enough. If you're only making 50,000 and you hit 100,000 in your portfolio in crypto, great. It's time to start putting money into stocks, index funds, and dividend, like anything else, so that way you can start.
My plan for the next bear market after this big crypto bull market is just investing in Bitcoin and the S&P 500. It's like if you have Bitcoin and you have the S&P 500, you're not missing out on any avenue. The S&P 500, you're investing the broad stock market, the biggest ones. Bitcoin pretty much is the S&P 500 for crypto. Bitcoin is in charge of the market. Things go up with Bitcoin. So it's like if you own Bitcoin, right? Like let's say you're like me, who's a heavy alt investor. You make a lot of profits from your alts. You typically want to wait a year after Bitcoin peaks and hits all-time highs. And then you can start saying, okay, I'm going to throw a little bit into Bitcoin and I'm going to throw a little bit into the S&P 500. That way you have the stock avenue and you have the crypto avenue.
Yes, exactly. And that's what I'm trying to tell you guys, especially if this is going to be your first like real rapid success in finance and investing. I strongly recommend, once you get your profits, pull out, go to conservative investments. While everyone's hyped up about the bull run, you're going conservative and you're investing in things that will generate more income. So as the next bear market comes, you have even more income than you did before to keep dollar cost averaging in.
Exactly. Like I'm still gonna let's say I hit $200,000 in crypto next year. That's not gonna be money to where I'm like, all right, I could just chill for a year, bro. All right, because that's what a lot of people would do in my age range. But I'm still gonna have to keep working because for some situations, like let's say you want a place to live. Well, it's like, yeah, you can show your bank account, but you also need income too, and you also need credit history. And a lot of people they undervalue what credit history is, because you got to have some sort of relationship with the banks. That's just how it is. You got to have some sort of history because if you have like no history, or if you have bad history, not even just credit wise, like with jobs, or even if
Mhm.
they look in your bank account records and they see you're just crazy spending, you're going to Dixon every night spending 20, 30, $40 on drinks. That's not a good look.
Oh no, it's definitely not. And keep in mind, when you guys go to get home loans, or if you want to start investing in real estate, especially if you want to invest in real estate and use it as an investment, not a home, not a traditional mortgage, they're going to look at your finances. They're going to look back the last 5 years. They're going to look where you're spending your money, how frugal you are, how much have you dipped into your savings, how much do you put into other investments, how much money are you actually making, where is it all going? Do you make smart decisions? How many credit cards do you have? How much? What are the purchase patterns on your credit cards? Like all of that goes into whether or not the bank's going to invest with you. And that's what a more giving you a loan is. They're investing with you. They're just getting their ownership of the investment as interest, and you have sole ownership of whatever that you're putting that money towards.
I was watching a video from this guy. He's in his 50s, or he's an early 70s baby. Early 70s baby. And he was making a YouTube video about the tortoise and the hare. We all know that story. We were taught that in school. Well, he was talking about how like his friend was taking the slow route, building up work history, credit history, building relationship with the banks. He was taking the slow route, regular
Mhm.
job. Here he was selling drugs and he was trapping in the hood and stuff, and he was making like sometimes 100 to 300,000 dollars a year off of trapping, not even working. He said eventually he had to slow down because with a heavy lift off, eventually you're gonna have a heavy setback. Where you're slow and steady, like the guy, his friend was, he eventually became very successful and a millionaire, and he started out working a regular type of job, building up credit, all that boring stuff, the stuff that sounds boring. And a lot of people undermine that. Like, even if you do hit success in crypto or whatever investing avenue, it's like, okay, what's next? Because you don't want that to be your enslavement. You don't want that huge gain you made in an investing avenue to just corrupt your mind, and you're just on euphoria buying shit.
Absolutely. And Cody is absolutely right. Um, but let me go. Cody's absolutely right on all that. All that, like investing and making money, is the most boring thing that you can do, because you got to be frugal, you got to save, you got to invest in the right areas at the right time, and you got to be patient. It's not
Yes.
this. It's not yachts and exotics. It's really more balance sheets and spreadsheets and stress.
You know how fast you can spend 100, 200 grand nowadays? You know how freaking fast you can spend over 100 grand nowadays? I'm not talking about the 70s and 80s and 90s where it take a little bit. In today's world, like, you can spend, even if you make 300,000 in crypto, you could spend that so quickly if you're an idiot. You really can. All it would take is just a few nights of gambling and buying cars that you can't afford. And if you got like drug addictions, like, yeah, marijuana is an addiction too, but I'm talking about like cocaine and all that stuff like that.
Absolutely. And I'm telling you, as a business owner, my monthly payouts is about like 600,000 for my moving company. And we generate about 800 to 900,000 a month on the slow side. During the busy season, maybe like 2 million. And it it's crazy how fast that money goes. Like today, the payments came in. I put money into payroll, paid the insurance, paid a lot of other things, and now it's like, man, I spent 70% of what came in like 2 hours.
Yeah.
So just keep in mind, like, if your personal finances can go just like that. But let's keep going. I want to talk a little bit about Porch Moving Group because they had a great earnings announcement.
It
Uh,
seems like every time we talk about porch, there's something new about it. Jeez, why ain't people talking about this?
I have no idea. Now, I have no idea why not more people are. This is the first time analysts are on the same side as me. It is rated a buy by most analysts, most accredited analysts in the industry. They were projected to make a loss of negative 24 cents. They beat that by making 1 cent earnings. Now, keep in mind, this is also after they're paying a shit ton of debt for buying up all these companies during the pandemic. So not only did they borrow money at APY to buy all these businesses, now that the interest rate went up, they are paying it off. So that means they're making more money now than they did 2 years ago during the boom. That is incredible. I don't know why this stock should be around $25 a share. I am still buying this every week, no matter what the price is. I am buying a crap ton of this. I've been buying this stock since it was at 55 cents. Actually, I've been buying the stock since I first saw it at the beginning of 2023 at like a buck 30.
Yeah.
It just kept dropping. I kept buying more.
I remember when you first talked about it, it was around the time we first started streaming. When we first started this, and you mentioned Porch Moving Group, and I was like, oh, that's interesting. It's like 5x, it's like 4x since then.
Absolutely. I want to tell you guys, my original holdings of Porch Moving Group was only 10% of my portfolio. The value of what I've been buying over the last year and a half has increased up to almost 1.1 million. And now it's 29% of my portfolio. It has beat out Microsoft, Walmart, and Apple in
You're making me
performance.
want to buy some Porch Moving Group.
And it's still climbing. That's it. I'm trying not to have a stream where we don't have this, but we I want to make sure we cover this all the time because I'm not pumping this stock. I'm just saying this is the power of finding undervalued companies that are headed in the right direction that people are missing. Because let me tell you, analysts in the beginning said this was a dog stock. I kept buying it. The balance sheets look good. The financials look good. Yes, they were buying up a lot of companies, taking on a lot of debt, but they merged everything into a home
You know what's
services
crazy?
networking company.
It's the same concept with crypto. A lot of people will say this coin is trash. This coin didn't hit all time high. This coin this coin that. When you know it's a good fundamental project, you DCA into it. There's naysayers about Polkadot. There's naysayers about Quant. There's naysayers about Chainlink. Every coin you can think of, there's naysayers to. Even a Bitcoin at one time. But it's like even though there's analysts and there will be analysts that come out that have skin in the game who have made good calls, but they're not right about every call, just like the naysayers of a certain coin is not right. Basically what I'm saying is it doesn't matter if it's crypto or stocks. If they're doing good financially and the fundamentals are better and there's more users and there's more people paying attention to it, regardless of what you think, it's going to go up in value. It's just a matter of when. It doesn't matter of opinions, it just matters of when.
Absolutely. Absolutely. So just keep in mind, make sure you do your own research and you understand what you're investing in. And don't invest in something just because one of us or anyone else says go invest in it. Make sure you do research. If you understand how the company works, invest in it. I mean, that's why I didn't invest in Amazon for a long time because I said I'm not investing in a company that's not making a profit. Did I miss out on a lot? Oh yeah, I missed out on a lot of growth in my portfolio. But it and still today, it's not a stock I'm going to invest in. That's just where I'm rooted. And you got to make the decisions that are right for you and just say just like Munger, he could have made tremendous amounts of money on Apple, but he just said, hey, it wasn't the right investment to what my core beliefs in investing were at the time. I didn't want to invest in Apple. I thought it was too much of a risk. And even though it's so successful now, it's hard to look back and say, wow, that really is a risk. I mean, they were on the verge of going out of business. Steve Jobs had just came back. They're looking for money to do Steve Jobs' idea. There wasn't a lot of wiggle room. There just wasn't.
Yeah, and it's the
And
same thing with the. Oh, sorry.
no worries. He just made a smart decision at the time. Who and at the time he could not in late 90s foresee where Apple was going to be today. That is a very hard thing to do.
It's
And it's
just
a
like with
very
Bitcoin.
exactly. But you got to remember, at that time, Steve Jobs was, I think, in his late 30s. I mean, most managers and investors won't really bother. They don't really like younger people in heads of Fortune 500 companies.
No, they don't.
So I understand where he was coming from. A lot of young people say, well, he should have invested. Like, that's because a lot of young people want to dream and want someone to believe in them. And that's okay. But a lot of people with money are very, very risk adverse. But I'm sorry, go ahead, Cody.
Oh, I was just saying, like, the risk Apple had back then is the risk crypto has now. It's the same area. It's the same now, except now you have more institutions paying attention to crypto. It's not like how it was 5 years ago, where institutions would laugh at your face if you talked about crypto. Nowadays, if you talk about crypto around institutions, they're not going to laugh in your face like it was 5 years ago. But like nowadays, that's just it's still like even the general public, like even hell, Amazon. Like there's people to this day, you can tell them buy some Amazon stock, they're not going to, even with the success it had. It's like that's just the average retail investor side, but on the institutional side, they can judge you based. It's just like Sam Bankman-Fried. Like they view young men running Fortune 500 companies as a degenerate Sam Bankman-Fried. That's pretty much how older, wealthier guys view it. Like, you could have a good plan, you could have a good dream, you could have a good vision, but if you're, it's all about what's happening right now. And if you're not delivering right now, it's hard for people to believe in you. Even people on my friends list on social media, like, they're not going to be fully praising me until the result comes.
Absolutely. And you guys just got to remember that's just part of human nature.
Yes, that is life and human nature.
And people are going to be people, and you just have to accept, because a lot, especially a lot of young people, most of them, they don't even think, they're not thinking about investing, they're not thinking about stocks, they're just thinking about living their life, having fun. Unfortunately, having fun early can be adversely affect your later years.
Yes.
So,
I want to have fun later. I want to be having fun. What I call having fun is going to a networking event with some drinks and being around like-minded people who don't have a degenerate mindset, and traveling. Traveling takes money and stuff like that. Like, I don't care about going to bars and getting, fucked up
mhm.
and all this stuff. And I might have bad habits. I might have vices. But it's like, when it comes to just the fun that everybody envisions when you mention as a 20-year-old, like, I don't care for it. Even if I had a car, even if I had a bunch of money right now, you would not catch me at the bars every weekend. You would not catch me always being in the mix. Like, I want to keep building and building.
Exactly, and that's what I'm saying. Like, Cody has where he wants to be. You guys got to have where you want to be. And for me, it helps writing it down. I write it down every year. They're not really New Year's resolutions. They're just goals on where I want to be. Did I hit where I wanted to be last year? What were some of the obstacles? How can I overcome those obstacles this year? Where do I want to be? Where am I going to put money? What do I do? What do I want to invest in? What do I want to do? What do I want to do personally? You got to plan it all out and then take it from there. But with that said, guys, we've been on for a solid hour. We do appreciate every single one of you being on. Fortunately, no Q&A on this one, because I do have to run to the bank to get some banking done for move some money around for my businesses. But I do appreciate all you guys. Thank you guys so much for coming in. If you can like, subscribe, and share the lives, that really helps. And we'll be live back on later today for the state of the market. Really love chatting with you guys. Hopefully, you guys enjoyed this stream. We always try to give you guys our input, our feedback, what we're talking about. Like I said, there's not a lot of news really going on in crypto. It's like, actually, crypto is very boring. Stocks very boring. The economy is very boring. Most of what's going on is just preparation for what's going on in the election. But be careful out there. Do your due diligence. Invest in only things you understand, and never moonshot your investments in one investment. Always diversify your money over a particular set of investments. I recommend make sure you have your reserve fund set, a year of expenses set aside, and have a well funded 401k or investment fund before you start getting into crypto. But that said, guys, thank you so much. Like us on Twitter, follow us on Twitter, follow us on Facebook, follow us on Twitch, and give us a subscribe. We're up to 309 subscribers. Give us a subscribe on YouTube. That really helps out, because, as always, these lives and videos are sponsored by you guys. Thank you so much, and we will see you later tonight.